I wrote some notes down. And what I had heard from previous versions of the bill, and please correct me if I'm late here with some of the more recent ones, is that are they changing the brackets as well and moving the brackets down to where I think the notes that I had was that it was if you made $650,000 or more, you were in the top tax bracket for couples. And I think not only are they thinking about raising that to 39.6, but also dropping the top tier to start at, I believe it's 450 or so for married couples. So it's kind of both effects are potentially on the table here. Am I understanding that right?
You are. You definitely are. And I don't know every single bracket perfectly, but what happened is with Trump a few years ago, he actually increased those brackets. So you were in kind of lower to middle income brackets for much longer periods of time. So I think they're going to decompress some of those brackets. But what I have seen is there's, other than the SALT deduction, which we can kind of talk about that, there's really not a lot that's in there that is under this 400,000. So, thinking through where you're at, and if you are up above that, thinking through, if let's say you own some apartment buildings, right, and or some duplexes, and you're thinking about going and putting new carpet in or doing painting, rehab, and you're like, well, I could probably do it next summer, and you're going to be in the highest tax bracket this year, next year, do it next year because it's going to be worth more to you to do it next year. Again, let the economics drive it. If you could get materials cheaper this year, then that makes sense. But that's one that people just forget about, is trying to plan when to put those expenses in. And you're right, Greg. I mean, those brackets might spread out, but again, we haven't seen a lot in there that under the 400,000 to 500,000, that there's not a ton of kind of tax increases. Capital gains rates, right? So it's my belief that we're probably going to settle somewhere on 25 to 28%. We're at 20% right now, not including surtaxes. So I always make the economics. If you said, hey, I was going to sell a couple of my rental properties, or I was going to sell some stock and maybe position that money towards rental properties, if you were going to go ahead and do it, trying to get that done before the end of this year at 20% versus doing it next year at 20 or 20 or at 25 or 28% makes a ton of sense. 1031 exchanges. There's been some back and forth, and it's kind of gone silent on that. They were talking about doing away with them back in March altogether, and then they kind of phased it down. I've seen some discussion of maybe if you make over $400,000 or $500,000, you won't be able to do 1031 exchanges next year. The first bit of legislation a couple of years ago actually changed the 1031 exchange rules. Used to, you could do 1031 exchanges with cars and all types of things. Now it is specifically real estate. So you can't do stock or anything like that. So that's one to think about if you were thinking of positioning from one market to the next, say from Atlanta to Jacksonville or something like that. If you're really high on Florida versus Georgia, maybe a good time to try to do that now to get those 1031 exchanges in before they do away with the rules. Does that make sense?
Yeah. Could you, maybe I wasn't aware of it. So am I understanding it correctly that 1031 exchange being removed from real estate is on the table still?
Oh yeah. No doubt about it.
Gotcha.
Yeah. Yep. Yeah.
That's no bueno. We don't want that.
Yeah. Yeah. So that's something to look at. It was big time early on. It's gone a little bit of there's been, you hadn't heard as much about the 1031 exchange lately. So what's the chances of that? I don't know. But again, if the economics said, hey, I liked Atlanta and I'm going to position my assets in Jacksonville now, and I want to do it in the form of 1031 exchanges. And you said, well, I'm going to finish them all up by Q1. Let's see if we can get them done by the end of the year, just to make sure you lock those in, because you would hate to kind of let it linger into Q1, Q2, and then boom, they bust you.
Yeah. Well, and for all of those out there that are trying to do that, it's a really hard time to execute that on a short basis, right? It's November 16th now, and you got to do it by the end of the year if you wanted to be super safe. It's tough to find inventory. For all of you who are looking for inventory, of course, it's a great time to call JWB because we actually do have inventory for all of those folks that are looking to do 1031 exchanges. So didn't realize that was so time sensitive, but definitely an opportunity for you guys to talk to us about that.
Greg, let
There's,
me ask you a little bit more about that, right? Because we have positioned this idea. We keep talking about the fact that Jacksonville is the high growth market. So if you are thinking long term with a rental property, and you are gonna, invest long term, it would make sense to pull the trigger in moving 1031 exchanging from something in Massachusetts and moving it to and moving it to Jacksonville property. Do you think that there is, if somebody hadn't thought about this already, do you think that there is an opportunity to get something like that in, like what, based on the laws of like naming the property and stuff like that?
Yeah. And so I think your question is, can a 1031 actually be done and closed by December 31st?
Yeah.
Yeah, absolutely. I mean, if there is going to be financing in place, it's going to be tougher, right? We're about 45 days out and we've got, 2 weeks that have some semblance of holidays in between them. And so things generally slow down for that. So if it's financing, we need to be on the phone like today talking about it. Many times 1031s can move forward with cash purchases, and JWB has those properties available now. So cash is certainly not a concern, and financing, get on the phone with us now, because we need every day to make sure we could close by the end of the year. Now, and then what we're saying here is that there is a potential that the 1031 may be taken away, but let's go back to Bryan's original message here, which is that this is not in place at the moment. So this would be if you are already convinced that a 1031 is the right thing for you to do at some point in the future, and you were thinking about doing it sometime in the near future, it would be to your benefit to knock it out immediately. Not necessarily for you to change your entire game plan just because of potentially what may happen. Is that fair, Bryan?
absolutely. I couldn't have said it any better. And one thing too, because we've kind of talked about the timing of this, there could be a case, maybe a case that if you sold a property in your assets were with a QI, qualified intermediary, going into Q1, there's a pretty good chance it would still qualify for the tax deferral when you sold the property. So getting the full thing, and again, we're speculating a little bit. And as I've talked, I hate to speculate, but I could see a case just based on normal tax theory where if you had the transaction that was closed and you were just waiting to get the closing done, or you closed on the sales side, so you got the tax deferral this year, and you were just waiting to get the properties closed, the money's sitting with the QI. I am not a 1031 exchange expert. We kind of rely on others, but just based on my knowledge of tax theory and how some of this works. So that's just something to keep in mind. So you could lean in a little bit, and maybe the second closings on the acquisitions occur in Q1 of 2022.